Hey everyone, welcome back to Corporate Decoder. Today BATL just filed their current report on Form 8K, and I am seeing some figures that investors should pay close attention to. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting its first quarter 2026 financial results, and it looks like a tough start to the year. So for those not familiar, this is a current report basically telling us about major events happening at the company. In this case, Battalion Oil Corporation is releasing its financial results for the first quarter of 2026. The main takeaway here is that they've issued a press release detailing these results, and that press release is attached to this filing. This section of the filing is all about the company's performance and its financial health. Battalion is telling us about its first quarter 2026 financial results. They've also flagged that some of the measures they're discussing in their press release might be what are called non-GAAP financial measures. Now that sounds complicated, but what it really means is these are ways of looking at the company's performance that aren't strictly in line with the standard accounting rules, often called GAAP. They say they provide these to help investors understand the impact of certain things on their results and to compare to past periods. They also make sure to include the standard guide numbers and show how they get from those to their non-GAAP figures. Essentially, they are giving us a more adjusted view of their performance. Looking at the actual numbers that have come out with this filing, we can see some pretty concerning trends. The news surrounding this release paints a not so rosy picture. Reports indicate that the company has been selling off assets and trying to reduce debt, but despite these efforts, they've still ended up with a significant net loss. Specifically, we're seeing a net loss of $64.8 million for the first quarter. This is a substantial amount, especially for a company with a market cap around $46 million. It is a clear sign that the business is facing serious financial headwinds. This SEC filing also confirms that Battalion Oil Corporation's common stock trades under the symbol BATL on the NYSE American exchange. This is important context because it tells us where and how investors can buy or sell shares of the company. For a company in the oil and gas exploration and production sector, which is known for its volatility, understanding this basic information is key. The filing also provides the company's principal executive office location in Houston, Texas. While this is standard information, it anchors the company's operations to a well-known hub for the energy industry. However, what is more critical than the address are the financial figures themselves. The fact that they reported a net loss of $64.8 million, alongside diluted earnings per share of negative $3.72, on revenues of $39.17 million, really tells a story of deep financial trouble. When you have revenues like $39 million, but a loss of $64 million, it's like spending nearly double what you are bringing in. And finally, the filing lists the exhibits included, the most important of which is Exhibit 99.1. This is the actual press release containing the detailed financial results we've been discussing. It is the source document for all these figures. The other exhibit listed is the cover page interactive data file, which is just a standardized format for data used in SEC filings. Now, looking at these numbers, it is clear Battalion Oil is in a difficult spot. They are losing a lot of money even after selling assets and cutting debt. This brings to mind situations where companies facing severe financial distress attempt complex restructurings. For example, companies like Sears before their bankruptcy went through multiple rounds of asset sales and debt reduction that ultimately didn't prevent their demise. When a company is losing this much money relative to its revenue, it raises serious questions about its long-term survival. A significant portion of the company's shares are held by institutional investors like Luminous Management and Octree Capital, which are known for often investing in distressed or event-driven situations. Their substantial holdings suggest they might be anticipating some form of restructuring or turnaround effort. The biggest concern here is the magnitude of the loss relative to revenue. This isn't a small dip, it is a massive shortfall. While they did mention EBITDA and adjusted figures, the core GAAP net loss is what truly reveals the financial strain. What I am watching for is how they plan to bridge this gap. Will there be further asset sales, more debt restructuring, or even a dilutionary equity raise, which some reports suggest might be on the horizon and could wipe out existing shareholders? The stock has also seen significant drops pre-market, indicating the market's negative reaction to these results and potential share dilution. My biggest concern is the continuous cash burn, which could lead to a further need for capital or asset disposals that might not be in the best interest of current shareholders. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Check out the Discord in the description.